I'm going to focus my comments today on three areas. I'd like to share a little bit in terms of what the results have been thus far with our initiative to provide home financing to the Muslim community in the U.S. Then I'd like to spend a little bit of time in terms of why the community needs to continue to find ways of reaching out, because mortgage is a huge business in the U.S. and there's a tremendous amount of opportunities for companies like Lariba and others to be able to come in here, take advantage of the real business opportunities, as well as provide a much needed service to consumers. And finally, I'll spend a little bit of time in terms of what does the Islamic mortgage market look like in 2003 and beyond, and why it is important that we continue to focus in this area. Freddie Mac has funded over $100 million in this product thus far. We're providing this financing in about 20 states, and we have multiple lenders in this program and multiple products in this program. Some of the names that you saw earlier today: Guidance Residential, American Finance House. We are involved with all of these different companies, and we think this is just the beginning of what is possible in this market.
There are 33 states now.
Okay, well, I was just going back with some of the data that we were able to compile internally. There's a high percentage of first-time home buyers. So Ted was talking a little bit about what the mission of Fannie and Freddie is, and is to really improve home ownership rates in the first-time home buyer community. And this is one of those products that is absolutely hitting all the minority and immigrant communities that the product had intended to do. So we're really pleased in terms of how far and the types of results that this product is yielding for us. The program is growing, as you can see. It started off, I have numbers from July, and the program has steadily grown, about $100 million plus right now. Before Freddie got involved in it, a lot of the financing in this community was short financing, 7-10-year type products. Consumers had to make huge monthly payments or huge down payments to be able to reach these, to get home ownership. Now these products have spread out. A lot of the products are the 30-year products, 20-year products, 15-year products, thus enabling a lot of different options for consumers and offering them lower mortgage payments to be able to get into their homes. Generally, we are seeing that the cost of this product is tracking very closely to the cost of conventional products. We think with time, this will be identical to what other conventional offerings are available in the marketplace. So the Muslim families, by and large, because of the involvement of the GSEs, their cost of financing has come down considerably. The little difference that still exists between the purple and the orange line is more a factor of this market maturing and some of the lenders growing into a little more scale, and you will see that there's a convergence in those areas. What we're also seeing is that consumers are self-selecting this product. So this is not necessarily a product that is competing with the conventional side, because as you can see, consumers are clearly paying slightly better than or slightly higher, but consumers are self-selecting into this product, which is primarily the intent that we had going into this. We talked about the states. Dr. Y reminded us that he's up to 30 states now, but you'll see that the product is in high growth, high minority and immigrant states as we had expected it, and so we want to. These numbers change quite a bit with new deliveries in different states. This is how it looked a few months ago. Now let me move my focus a little bit on the outlook of mortgages, originations, and I go back to one of the reasons this community needs to focus on home ownership is it's fundamental to building wealth for American families. Home equity is, by and large, the biggest way a American family save today, especially for those of us that were involved in NASDAQ a few years ago. We've all come back to our homes to make sure we have a little bit of net worth left. 2002 was a record year, $2.5 trillion, almost half the mortgages that were in the market got refinanced. There were $90 billion of home equity or cash that people took out to purchase or pay down other forms of debt, to purchase automobiles, to pay for college education. Mortgage is becoming very, very central to how a family plans their finance. House price appreciation generally is keeping pace with the income growth. So there was a lot of questions at lunch about the housing bubble, and I'll share a little bit of information with you in terms of what we're seeing the housing bubble to be. Yes, the economy has had an impact on delinquency, and we are seeing a rise in consumer delinquency, both on the consumer loan side as well as particularly on the subprime side, and I'll share a little more color with you on that. This is a little bit of an updated slide from my last talk here. In the last 3 years, or since last year, the value of American homes have gone up by $500 billion. If you look at the amount of equity, and this goes back to the wealth building discussion that we were having, the amount of equity that American families build through their homes and their net worth is very much tied to the home. And this is why it's very important for this community to look at this as an investment, and the faster we grow this, the better we will be able to serve the Muslim family in the U.S. A large percentage of, or reason for why the volume has been so strong is we've seen rates at a 40-year low. If you look at the bottom, the red line there, to the left-hand side, as of February 28th, mortgage financing cost for a 30-year product was about 5.79. The last time we saw that type of a rate was in 1965. The other rate that I have there that's important for tracking purposes here is in 1963, the 10-year Treasury was at 383, and actually this number went down earlier this month, but as of last week, I think as of yesterday, the 10-year Treasury was at 4.1. So we are at a record low financing cost period for homes. And this has created the energy around people being able to reduce their payment loads. This has created a lot of the energy around the home financing business in 2002. We see the same trend in 2003. This is actually a little bit of a dated slide, because I think our projections for 2003 are north of $2.5 trillion. And I think Fannie just announced their projection closer to $3 trillion. So this is going to be another huge year. About another 50% of the mortgage business, total mortgage business, has the potential to be rewritten in 2003. So American Home Finance and other sort of people serving this community, this is your opportunity to go back and look deeper into your community to be able to grow your share from those that exist, that have mortgages today. I've been in the mortgage business for a few years, as you can tell with my gray hair and no hair. And when I started in 84, 85, a $500 billion mortgage market used to be big. We used to try to figure out if it went from 500 to 700, how do we plan for it? Today, if you look at this, even after this refi period tapers off, we're still looking at mortgage markets north of $1.2 trillion. So this is going to continue to be an important area for the economy. It's going to be a growth area. and we are very bullish on where the mortgage industry is headed. I spent a little bit of time talking about the home equity. This is becoming a very important part of the financial plan of every family. A lot of the tax laws, the way they're written, is moving a lot of the consumer expenses under the home, under home equity. This is a very effective way for consumers to manage their finances. And over time, this is going to continue to grow as house prices continue to grow. So even though consumers are taking out a tremendous amount of equity, this equity, as the previous slide suggested, there's still a lot more equity left in the market. And the equity is helping consumers consolidate their finances in a lot more efficient way. And from a financial planning perspective, this is the direction that it will be going in the future. Talking about the house price bubble, what you have up here is the annualized appreciation rates for home prices, as well as the median household income. As you will see, that there are some markets, particularly in the New England and in the mountain area, where house prices have grown much faster than income. But by and large, in the last 10 years in the U.S., if you look at income, it has grown a tad under 4.5%, and house prices have appreciated a tad above that number, up to about 4.65%. So I'm not suggesting here that there are not markets, especially in Northern California and other places where things may not be adjusting down. There are markets definitely that are adjusting down. But what we can tell that there is a fairly good reason for why home prices are where they are, and that we don't really see a big bubble in home prices nationally, notwithstanding that there are some markets that will see this change. And that change, the fluctuation is much more on the higher loan balance, the jumbo type product, than the conforming loan balance that Freddie Mac and Fannie Mae participate in. A little bit of information around delinquencies, or particularly in both on the mortgage side. As you can see, delinquencies have ticked up on the conventional side, but it is since the recession started in 2001, you can really see the spike in delinquency in the subprime, FHA, and VA portfolios. Until the employment situation begins to turn around, we continue to see a little bit of deterioration in credit. This is also pretty evident on the credit card side, as well as the automobile financing side. So I know American Finance House is involved in some of these businesses. I don't know if you're seeing the same type of trends or...
We are very picky.
Good, good. So as you can see, the recession has had an impact on how some of these debts are performing. But housing continues to remain strong. House price appreciation continues to be pretty good, and the prime side of the business on the housing side is pretty strong as well. Let's talk about 2003 and beyond. We just talked about another very strong year in origination coming up. Rates, although they've ticked up a little bit as of Friday or this past week, but we expect them to stay relatively stable throughout the year. Home values, we continue to believe home values are going to appreciate in the long term, notwithstanding the fact that there will be some markets where prices will go down. But in general, we believe that this is going to continue to grow. As I talked earlier, we believe the mortgage debt outstanding is going to continue to grow, and that's going to be for a couple of reasons. More minority families will be buying homes, more sort of credit that is in other types of debt would come under mortgages, college financing may come under. So from a financial planning perspective, people will be looking to move more and more of their financing needs under the mortgage. Equity will continue to be an important driver for wealth, and I cannot emphasize this enough, because this is one of the reasons why all the practitioners in this business need to look at how fast they could provide these types of services to the community. And this goes a little bit to some of the comments that Ted was sharing, and maybe I should go to the next slide here, is we see a tremendous amount of growth, first-time home buyer growth coming out of the minority and immigrant communities. At 75% home ownership rate, there is not going to be too much upside in those businesses. But there's a lot of studies that are out there today that clearly indicate that up to 60% of the first-time home buyer market is going to be from the minority and immigrant community in the next decade. As far as the Islamic mortgage opportunities is concerned, you can see in 2 years a $1 million project or initiative has really blossomed into a $100 million financing opportunity. And we think that there's a lot more upside to this than we have seen. My personal belief is as good a job as Dr. Awai Lariba and Guidance and others are doing in this arena, there's a huge amount of opportunities for new companies to get into this business because there is a much broader population of Islamic families in the U.S. that can take advantage of these types of programs. Along with us, now that Fannie is involved in the process, it is going to lower cost to the community. I mean, I remember 2 years ago, the way a lot of this was financed was private equity from investors that American Home Finance was arranging, or there were some cooperatives. MSI was on the board earlier today. MSI was getting deposits from families, like a $25,000 deposit. Then MSI would then use that money. It's not just MSI, all of the cooperatives work the same way, to raise the rest of the money that was needed to purchase the home. So sometimes families had to wait up to 18 months before they could buy the home of their liking. Now, it's almost within 30 days, the capital is available, sometimes even sooner. In fact, Michael and I were talking a couple of weeks ago. It's taking them 2 or 3 days to replenish their capital when they're dealing with the GSEs. So we believe that there is a lot more opportunity here. We are encouraging. We would like to have more people get into the business. The business requires some investments. It requires investments in the standardization of products. I mean, I've been involved with this for a couple of years. There is still a lot of different ways to skin these structures. And with the debate earlier today, you can see that there's a lot of different views on how and who needs to be included in terms of standardizing the product. But from being able to assure liquidity in this market, the more standardized the product is, the more standardized the approach is, the documentation is, the easier it would be for companies like Freddie Mac and Fannie Mae and even FHA to be able to look at these as comparable instruments to what we're dealing with. Because what we've seen is there is no difference in the collateral. There is no difference in the creditworthiness of the individual that is borrowing. There is no difference in the willingness of the individual that needs the money. At the end of the day, they look exactly, and in some cases even slightly better from a credit, collateral, and capacity perspective than our normal distributions. So the standardization here is really going to be key. Helping bring new participants in this business is going to be important. And as time goes by, there will be more sort of investment needed both on the infrastructure side of origination and servicing, because these are fairly sort of scaled businesses and need to attract some capital and professionals to be able to do that. So in conclusion, what I'd like to kind of leave you all with is, look, we've already made some significant progress in this area. And there is a lot more opportunity here. The housing industry and the mortgage business is going to continue to be pretty strong in the coming decades, particularly for minority and immigrant families. There is tremendous new business opportunity here for people that are thinking about sort of providing this type of service to the community. And we are encouraging more and more people to look at this as a much stronger sort of opportunity to serve a much broader community because there is a lot of growth involved in here, and growth from both perspectives, being able to do something or deliver the dream of home ownership to Muslim families, as well as being able to build businesses that are very specifically serving a underserved need of the community.